Investing can be as easy as you want it to be. Good morning, guys. It's your boy Ty, and I hope everyone had a happy new year. And before we start off this year in the stock market, I wanted to make sure that any of my new investors understand that investing doesn't have to be hard. So if you're new to the channel, make sure you hit that like button, subscribe to the channel so you can come back and see me. I got plenty to talk about, and I like to make sure that everyone knows the different avenues to get a piece of the pie. That's the sole purpose of my channel. Alright, and today I want to talk about how investing can be whatever you make it. So if you are a new investor, alright, you get into the stock market and you hear a lot of things about different stocks. This stock is hot, that stock is hot, don't buy this stock, sell that stock before it hits its all-time high so you can take profits. And you hear all of these types of advice and tips in the stock market. You don't have to go down the avenue of picking and choosing singular stock, individual stocks. You don't have to do that. You don't have to. And you can make money just by buying ETFs as a simple way to invest. All right. So with that being said, let me show you guys a growth ETF that performed extremely well last year. I was in this growth ETF and it performed well, and it made me money. And honestly, a new investor can put all their money into these types of ETFs. First off, I'd like to say I'm not a stock advisor. I'm not a financial advisor. If you need financial help, please seek out one. I'm just showing you guys what I did, what I saw in the market, so you can learn or take a little bit away from my experience. So let's go to the ETF. All right, and this ETF is SPYG, SPDR portfolio S&P 500 growth ETF. So everyone is familiar with the SPY, the index of the whole entire stock market. A lot of people use it as an index, and if the SPY is doing good, the overall market is doing good. If the SPY is down, the market is down. So this is a branch off of the SPY into more growth companies, and it performed extremely well last year. It had a 30% growth last year, and over the last 5 years it had a 173% growth. So this thing is definitely growing. So if you are new to investing, you can look for investments like this. SPYG was one that I was in. I did sell out of my position inside SPYG just because I got a handle on things and I'm trying to outperform certain ETFs. But that takes a lot of work and a lot of know-how to outperform the SPY and SPYG, things like that. To outperform a ETF, it takes a lot of know-how and a lot of research. You have to research and know what you're getting into to outperform ETFs like the SPY and SPYG. But if you don't necessarily want to get into all of that research, if you don't necessarily want to try to beat the stock market and have to have your ear to the ground all the time in the stock market, you can invest into an ETF like the SPYG. And SPYG outperformed the SPY because it's more so for those looking for growth. So when we come down, you can even see how it's weighted. It's weighted more so in technology. But when you look at the companies, Apple, that's a company that you want to own. Microsoft, that's a company that you want to own. Amazon, company that you want to own: Tesla, talk of the town; Alphabet, that's Google; Class A, Class C; Nvidia. I don't know if I'm ever saying that right. Please, someone correct me in the comments. But Nvidia, that's one that you want to own. Facebook, one you want to own. Home Depot, Adobe. See, these are companies that are great household names, and the SPYG is invested into these companies. If you don't know, almost all of these companies, I'm not sure about Home Depot or Adobe, I'm not sure the exact price, but a lot of these companies are well over the price of $72.47. So if you want to get into these companies and have a piece of these companies, you can invest into an ETF like the SPYG. And if you want to see how the SPYG stacks up to other ETFs like it, I'm on Robinhood right now, but you can come down and you can look at the competition. It has the competition right down here. So if you go to Invesco, QQQ, or a lot of people talk about that too. You know, it's basically the same thing. It outperformed it. SPYG outperformed this ETF. But this ETF is similar. You see the names? Heck, besides one is very similar. So you can get into trying to see which ETFs are hotter than the other, but a lot of them are doing the same thing. So no matter what ETF you're getting into, for real, like all of them typically do the same thing. But I like the SPYG because it's tied to a big name, the SPY. You hear about the SPY all the time, and this is the SPYG, SPY Growth. All right, so if you are looking for a simple way to invest, a simple way to grow your money, you can invest solely into an ETF. All right, and this ETF is for growth. So you know you got ETFs for dividends, and it's one down here too. We're gonna go to the SPYD, which is a branch off from the SPY, but this one is for dividends, and you guys can see it performed well too, extremely well. But I want to point out something about dividend investing compared to growth investing. So we're looking at the 5-year. Last year it had an awesome growth. Why? Because when we zoom out to the 5-year, everyone knows almost every stock in the market tanked when COVID hit and it got widespread. So we are experiencing extreme volatility of stocks rising because everything dropped around the time COVID hit. But it's now coming back to the point where it was at, and it might hit this normal area. And what I want to tell you about dividend ETF and dividend companies, those that are into dividend stocks, you guys should know this. But if you are a new investor, I'm about to show you something about these dividend stocks and dividend ETFs. Typically everything is jumping up right now because everything is bouncing back from COVID and all that. But typically your average dividend ETF or dividend stock doesn't grow a lot, as you guys can see. So you're talking about years right here. In like 3 years, it only grew 5%. It's mainly staying steady to pay its dividends out to the shareholders. All right, so you're looking at right now, it's about 3 years, and it only grew 11%. But when you are dividend investing, you are mainly looking for a steady, consistent dividend that you know you're gonna get. So that's why this ETF isn't more so for growth, it's more so for dividend investing. And again, you come down to the holdings, Pfizer. These are all names that you should, Chevron, Iron Mountain, all names that you should hold if you're looking for dividend income. But to have that security, you can invest into an ETF. And heck, if you want a little bit of growth and dividends, you can invest into both of them. But I just wanted to show y'all that, because investing doesn't have to be hard. Investing doesn't have to be hard at all. You can simply get 30% and off of ETF without all the know-how, switching stocks and all of that. And 30% is great. 30% is better than your money would get if it was sitting in a bank. 30% is actually a nice return, and especially if you know you're gonna get it. Certain stocks sometimes have bad years, but I just wanted to put on you guys' radar an easy, simple way to invest for any new investors and investors that are just beginning. Investing for beginners, it doesn't have to be hard. Investing doesn't have to be hard at all. You can just put your money into a nice growth ETF that's invested into household name companies, and you can get a nice return without all the legwork of researching stocks, researching when you should sell this stock, when you should sell that stock. You just go into the ETF, and then after that, you can pull your money whenever. And that's another thing about ETFs that I like. When you invest into a stock, you're kind of worried about when you pull out. You want to make sure you get out of the stock when it's at its high. With an ETF, you kind of just going to buy the ETF and you're going to sell it when you want, because you're not really tracking each individual company like that. It's a lot easier. So yeah, anybody that's new to investing, that wants to get into investing, check out these ETFs. So yeah, I just wanted to show y'all a simple way to invest so you can get your bread without all the headache. Simple investing. Alright, and you can even go into certain sectors and pick out specific ETFs, cater to certain sectors of the market if that's what you want to do. But yeah, make sure you check out ETFs for simple investing and easy investing methods. Alright, make sure you like, subscribe, and come back and see me. I got plenty to talk about. It's just the beginning of the year. Alright, so I hope to see you again. Peace.